Here's 5 best ETFs by YieldMax that pay monthly and even weekly dividends not named Misty. Now, before you guys come at me with all this hate or just concern, no, Misty is not a bad fund. It's actually one of the most popular ETFs by YieldMax, and for a good reason. And yes, Misty is a great fund if you love Bitcoin, MicroStrategy, or just strategy, and you want that high juicy monthly income in your portfolio, then Misty is a great option for those investors who want ultra high income in their ETF portfolio. Of course, a quick disclaimer is that yes, higher yields are great, but with higher yields, you're also subject to higher risk in your portfolio with these YieldMax derivatives. Basically, YieldMax uses what's called synthetics, which basically replicate the price movement of the underlying stock in the ETF for that high juicy monthly or even weekly income, as well as provide some volatile income payments because these funds are based off of volatility. And you should know that basically when a fund pays out these huge dividends or distributions as premiums or income, that your NAV will drop by the distribution rate or the dividend, because that's just how it works for investing in these dividend derivative ETFs. Of course, you should know that whenever an ETF writes or sells call options on the underlying stocks, that you will then forego upside for in exchange of higher income, so you're going to have less upside capture, which is why I say that these funds are for income investors right now rather than growth investors. So if you don't want growth, then these ETFs are going to be for you, but if you want growth, then stay away from these funds right away. I could basically go on forever and ever on the pros and the cons of these funds, but let's get started with 5 of the best ETFs by YieldMax that are even better or as good as Misty, so let's get started right now. The first ETF is going to be ULTY or ULTY, YieldMax's Ultra Option Income Strategy ETF. Why I love ULTY is because simply you have what's called diversification, which obviously Misty does not have, which is why I love ULTY for diversification benefits to investors. With ULTY, you own a basket of stocks, unlike Misty, which is just one stock of strategy or basically Bitcoin proxy. But long story short, ULTY is great if you don't want to bet on one stock and a basket of stocks instead. ULTY, just like the other YieldMax ETFs, prioritizes current income, and then a secondary objective is to seek exposure to the share price returns of the underlying securities in ULTY. These are subject to a limit on potential investment gains for each security in ULTY because, of course, YieldMax writes or sells covered calls on the underlying securities to generate income, which of course caps your upside. ULTY, of course, invests in many different stocks as a sub-advisor, will then select between 15 and 30 underlying securities, primarily on the basis of such securities' implied volatility levels. The top holdings in ULTY are ones that are high-flying growth stocks and, of course, leveraged derivatives like ProShares QQQ, Palantir, Strategy, Tesla, Robinhood, and of course, Nvidia. The top sectors in ULTY are technology, followed by financials, consumer cyclical, utilities, and then consumer defensive. So you get a very broad range of sectors for, of course, that benefit of added diversification in your portfolio with ULTY. One fun fact is that ULTY is actually a weekly paying income ETF, where it used to be a monthly paying ETF, but now it's just weekly. And as you can see, the income has been pretty stable so far for ULTY, which is pretty unusual as it pays out those income payments to investors on a weekly basis. So that's pretty solid for ULTY. The current distribution rate of ULTY is just under 100%, and the expense ratio is on the higher side at exactly 1.3% as well. ULTY is still one of the newest funds by YieldMax, so give it some time to catch another bull market, and you might see some very solid returns by YieldMax funds like this one in a very diversified manner by YieldMax of ULTY. The second ETF is going to be PLTY based off the hype stock of Palantir, YieldMax's PLTR Option Income Strategy ETF. If you love Palantir and you want income, then PLTY is a perfect ETF for you because Palantir stock, of course, doesn't pay a dividend, where PLTY does pay a high juicy monthly income distribution. Also know that PLTY will have a better risk to reward ratio because you're taking in income from Palantir versus Palantir. You're just relying on their share price appreciation because it doesn't pay a dividend, so also keep that in mind for investors. With Misty and PLTY, these are more riskier funds or ETFs because you're only betting on one underlying security, where something like ULTY or other funds by YieldMax that are based off a broad basket of securities will have less risk to investors because of that one thing of benefit of diversification. This ETF seeks current income first, and then the secondary objective is to seek exposure to the share price returns of Palantir. So if Palantir goes up, PLTY should also go up long term for its total returns because that's how these covered call ETFs work. But know that yes, you will be capped on the upside, but you will also have some good total returns from income from PLTY if Palantir goes up long term. PLTY's monthly income payments have been very volatile, but it's on an upward trend, which is okay I guess, but it's still very volatile. The current distribution rate of PLTY is around 150%, where the expense ratio is exactly 1.44%. PLTY has been crushing it as of lately because of course Palantir has been going up as well. So if this trend continues, then PLTY should have some great solid returns long term for income investors by YieldMax and this one ETF. Our third ETF is going to be NVDY based off the semiconductor king of NVIDIA, YieldMax's NVDA Option Income Strategy ETF. Once again, if you love NVIDIA, which has a super small dividend, an actual dividend, you're going to love NVDY because it has high juicy distributions from basing off those covered calls off of NVIDIA. So yes, this will be a great fund for investors who want income off of NVIDIA. NVDY seeks current income first, and then the secondary objective is the share price returns replication of NVIDIA stock. Long story short, if NVIDIA goes up, then NVDY should also go up long term for its total returns factoring in dividends in the share price or NAV gain or erosion as well. It's no surprise that NVDY's income payments have been volatile, super volatile to investors. But yes, that's the game you play with these YieldMax funds, with these synthetic option strategies that are very complex derivatives. So yes, know that in advance. The current distribution rate of NVDY is just under 150%, where the expense ratio is exactly 1.27%. The performance of NVDY has been super solid because of course NVIDIA has been going up, so that's also good for YieldMax funds, especially NVDY. The fourth fund is going to be another YieldMax fund for diversification that I love so much, like YMAX. YieldMax's Universe Fund of Options Income ETFs. Why I love YMAX is, of course, you guessed it, diversification. Because instead of choosing just one YieldMax fund like Misty, Coney, PLTY, NVDY, etc., you can invest in all of them in one fund like YMAX. YMAX's objective is to seek current income right now only for investors. Yes, only current income is the objective for this fund. So if you want income only, then this fund is for you and it pays out its income every single week on a weekly basis. This YieldMax ETF of YMAX is primarily composed of YieldMax ETFs only, where its top holdings by YieldMax funds are going to be ones that you know and love, like Murni, Ybit, Babo, Misty, and of course TSLY or Tesla. One fun fact about YMAX is that it used to be a monthly income fund, now it pays out its income weekly. And as you can see, the income has been pretty volatile, which is no surprise for YMAX. The current distribution rate of YMAX is around 70%, where the expense ratio is exactly 1.28% as well. Remember, if you love YieldMax, then you're going to love this fund, and want income, then this fund is going to be for you of YMAX. Our last fund is going to be YMAG, YieldMax's Magnificent 7 Fund of Option Income ETFs. YMAG, of course, invests in, you guessed it, the Magnificent 7 tech stocks and then writes or sells covered calls on those stocks to generate weekly income to investors. So if you love the Mag 7, then you're going to love YMAG because instead of owning just only Tesla, only AMZ, only APLY, you're going to love and own all of them in just one fund of YMAG. YMAG's objective is to only generate current income for investors. So if you want income, this fund is for you off of Mag 7. So if you love the Mag 7 and want income every single week in your portfolio weekly, then this fund is going to be just for you. This YieldMax ETF of YMAG holds the Mag 7 YieldMax ETFs like Tesla, MSFO, AMZ, APLY, FBY, NVDY, and then of course GOOY of Google. Once again, YMAG actually used to be a monthly income payer. Now it pays its income weekly, which is a pretty cool thing for investors. And of course, it's no surprise that its payments have been very volatile to investors in YieldMax fashion for this ETF. The current distribution rate of YMAG is just under 100%, where the expense ratio is exactly 1.12% as well. The performance of YMAG has been super solid so far, only because Mag 7 has been going up as well, and I don't think it's going to go down anytime soon in the future because tech is of course the future of investments, especially in the stock market right now and in the future for decades to come. Now if you guys like this video, please give it a like because this cute puppy did. Now if you guys love NEOS products like QQQI or SPYI, check out this video right here. I legit interviewed the CEO or the co-founder, Troy Cates. And if you love a high dividend every single month or distribution, check out this video where I interviewed Adam Patty, the CEO of Vista Shares, with their new ETF of OMA. Now, I love you guys so much, crushing the stock market, and take it easy. Peace.